Good morning. This is Larry Edelson for my Uncommon Wisdom video for Thursday, April 29th. I hope you're all having a good week. We're seeing a lot of exciting action in the markets, specifically surrounding the news about Greece. One day they're going to get bailed out, the next day they're not going to get bailed out. Their bond markets are basically collapsing. Interest rates are surging in Greece. And as a result, the euro is really taking it on the chin here against most all other currencies, especially the dollar. So we're seeing the euro begin to slide on fears of a sovereign debt crisis continuing from Greece to Portugal to Italy and Spain, then to Europe as a whole. And mark my words, this sovereign debt crisis, which I've been warning about for years now, will eventually hit the United States, and probably a lot sooner than most expect. The most important thing right now, let's go to gold, because this is what I've been keeping my eyes on very closely for you, because gold has an uncanny way of anticipating future events. If you recall, for weeks now I've been saying the critical level for gold is for gold to close above $1,162. That is a resistance area on this chart here around the red line. It is also a technical and very important buy signal on my proprietary cyclical models. And we did achieve a closing above 1162 yesterday. This to me means that the next phase up for gold to new record highs has begun. One caveat: when we get an important signal like this, it does not mean that you should rush out and load up the truck with gold and gold shares. This kind of signal usually takes a few days to back and fill in the market. We'll probably see gold pull back and scare out all the weak buyers who are buying above this resistance area and fake everybody out, and then gold will explode to the upside. So if you look at this chart right now here, we have a buy signal on my proprietary models. We have a close above resistance on the charts. What's likely to happen is you will see a 1 to 3 day pullback in gold, bringing it back down to 1140, maybe even 1130, and in the worst case, even back to $1,118. But then the next acceleration higher will begin to new record highs. There's also the possibility gold could just blast off straight to the upside here without anything more than a very shallow pullback. The bottom line here is that the next leg up in gold is confirmed. However, don't back up the truck and load it up with gold or gold shares. Wait for my signals. We want to buy at the right time, at the right price. Now that we have those signals, we want to be very careful. We don't want to chase the market higher. We want to plot our strategy out very, very strategically. Let's take a look at the dollar right now. The dollar has reacted to the upside. You can see it over here. The dollar has reacted to the upside as the euro has fallen. That's not surprising. I expected that to happen. But bear in mind, what's happening to the euro now as it really slides quite dramatically is going to also happen to the US dollar as the sovereign debt crisis works its way west towards the United States. Remember, the United States is ground zero for this entire financial crisis. The real estate bubble burst here. The over-leveraged real estate market collapsed here. The shenanigans in the real estate market were mostly in this country. The subprime and mortgage fraud that occurred was mostly in this country. The investment banks that booked up like giant bookies all the derivatives that have started to go bad, ground zero here too in the United States. Speaking of which, a quick side thing here, the Goldman Sachs investigation is a very serious matter. It is the tip of the iceberg. I am not going to judge them. because many of the things that Goldman does are absolutely fantastic, and I would hate to see Goldman go down as a result of extreme regulatory and judicial process. That would be very bad for everybody. That would be very bad for Main Street. However, the regulatory investigation into Goldman will go deeper. It will hurt the company. It will hurt many investment banks, and it will not be good for our economy. It will, however, be good for natural resources, especially gold and oil. Back to the dollar here. The dollar has a little bit more upside here. It could go, basis the dollar index, up to 83, 85 level. But don't be fooled. It's a short-term rally in the dollar against the euro. The dollar remains in a very solid, strong, long-term downtrend that will not bottom at least till 2012, maybe even 2015. And between now and then, we'll see a real crisis occur in the dollar, and I suspect sooner rather than later. Let's now turn to the Dow. The Dow got up to 11.2. Let me pull that down for you here. Dow got up to 11,258. And then took quite a hit on the worries about Greece and Goldman Sachs. It has now fallen back below this uptrend line. However, don't be fooled. The stock market is not going to collapse here. We could get back down to 10.8, and then we will likely move back up and try to get above 11,258, maybe even to 11.6. The short-term cycles continue to point higher for at least the next couple of weeks. Intermediate-term cycles have gone through an inversion, meaning that where a low is expected, we might see a high. So yes, the Dow is getting toppy here, and as I told you before, you do not want to be long a lot of stocks except select natural resources in this market. So I am not advocating going long the stock market. I am still saying that it is topping. I'm just saying don't expect a crash. That's not in the cards just yet. And even when it is in the cards, which is probably later in the September-October period of this year, I don't think you're going to get much below 10,000 to 9,500, maybe even 9,000 worst case. So anyways, don't go long stocks here except for the select natural resource stocks and Asian and foreign stocks that I've been recommending in my Uncommon Wisdom column and in my Real Wealth Report. Oil, let's take a quick look here. Oil took quite a hit yesterday, falling down to the 82 level again. This was primarily concerns about, again, Greece, sovereign debt, liquidation of leveraged positions in the hot money markets and the hedge fund markets, and some profit taking. But notice how we're finding support here already in the 82 level. I suspect oil will rally back up to 87, going to chop around for the next couple of months between 87 and $80 on the low side. But it remains in a renewed long-term bull market that will see $93 or $96 per barrel later this year and over $100 next year. For my Resource Windfall Trader subscribers, we grabbed some nice gains on some Chevron calls. We have some additional gains that we're trying to bag now. We'll be looking to buy some oil positions on a pullback in oil shares. Lots of opportunities here for making money, but they're going to be dangerous, choppy markets. They're going to require patience. They're going to require a lot of skill. They're going to require keeping your emotions under wraps, because emotions are the kiss of death when it comes to any kind of trading or investing. Till next week, this is Larry. Please stay tuned. We're entering some very critical periods in all these markets and in the global economy, with the sovereign debt crisis starting to really heat up in Europe and soon blow westward to the United States. Till next week, have a good weekend. This is Larry.